How's it going, guys? Welcome to my YouTube channel. My name is Prince. I'm a full-time currency trader and I'm a CEO of PrinceForexTrading.com. Now, what I'm looking to show you today is how you can, just like the title says, how you can win every time in trading, or how you can win at forex trade. I'm not really sure what the title is anymore, but something along that line. Now, what I want you to pay attention most in this video is the mentality behind my trading. I mean, the technicals, of course, but pay attention to how I view winning versus losing. This is something that's so prevalent when it comes to trading. A lot of people are so scared of going through the kind of things I'm going to show you in this video. Now, if you can learn any lesson from this video, it's just to view winning and losing as not like night and day. Like, just put it into perspective is what I'm trying to say. Like, look at these two trades I'm going to show you in this video and see the kind of lessons I'm going to teach you. And of course, I'm going to see you after I break down these charts. Now, I'll see you at the end of the video. So the first trade I want to show you is a trade I took a few weeks ago in the New Zealand dollar. Now, the mentality behind this trade is actually nothing special at all. And I guess therein lies the problem when it comes to a lot of traders. They think they have to do all this fancy stuff. But here I am doing something very simple that anyone can understand. And I'm going to explain to you right now. So, of course, if you're any kind of trader, the first thing you want to do, any kind of technical trader, of course, the first thing you want to do is understand what the hell is going on. And what I mean by this is understand where the market is going, where the market is coming from, and where it's likely to go next. So what I do is, first of all, I go onto the daily chart to, like essentially get like a bird's eye view. What that means is I want to see exactly what is happening. So this is the trade right here. This is the trade I want to show you, the first one anyways. Now, if you have a look back, you can see the market has been in a bit of a consolidation, and then finally we broke out to the downside. Now, I'm going to explain how this works technically, but let's just see what the market has done so far. So far we've had a new structure low here, we've had an outside return here, we've had a new structure low here, an outside return here, and a new structure low here. So what does this mean essentially? Now, this is how the market moves for the most part when it is trending. When the market is in a consolidation, as it is here, you can't see any of that. It's just a bunch of nonsense, which you can still make money from. But today, that's a topic for another day. But today, what I'm going to show you is trend trading. Okay. Now, let me just draw this out so it makes more sense. Making a mess now. Let's just take this off here. Okay. Let's just draw this in. So, essentially, what I just showed you is a trend. A trend, you have to have an initial starting point, essentially where the trend starts from. And you have a new structure low, and then you have a relief. Okay, a relief is essentially the market just taking a breather. A relief can come in usually one or two ways. Okay, it can come as a retracement, or it's kind of like a sideways movement. So sometimes you see something like this happening, like a sideways movement. Obviously, this is a terrible. This doesn't even look like a chart, but you get the idea. It's like a consolidation, like a sideways movement. And then you get like a move again, and then you get a sideways movement or a retracement. So this just looks so dirty. Essentially, what I just showed you is the first case, which is you have a new structure low, then you have an outside return, and then you have a new structure low, and then you have an outside return, and then you have a new structure low, and then you have an outside return. I'm not going to say it again because now you get the point. But another new structure low. So, what I just drew here is essentially what I just recognized here. I had an initial starting point here. I had a new structure low. I had a retracement. New structure low, retracement, new structure low. Now, bear in mind this is a daily chart. So, there's a lot happening in between that you're not seeing because you're on the higher time frame. Now, this is the difference. If you're gonna like predict what the market is doing, you have to define the time frame that you're doing this at. If you're on the daily time frame, it's going to look a lot different than when you go onto the monthly time frame. You can't even see that trend anymore. It's disappeared. So now the question is, what time frame are you looking at? Now, when you've determined what time frame you're looking at, now you have to determine exactly You've determined what the market is doing. Now you have to determine what the market is likely to do next, and finally how it's likely to do that. So we've determined that the market is bearish, and we've determined that the market is gonna put in an outside return. Now, what are the places that you're looking for that outside return to come to? Now, this is where support and resistance comes in. Now, this market has broken the previous structure resistance, which is now turned to support. So this area here was the first area I was actually looking at to take this trade. But look at what happened. Market just came and blew through that area. Now, I did not get angry when this happened. I'm actually lucky. If the market gives you a very green or a very negative result to what you were expecting, just take it and just look for the next opportunity. Now the market blew through this zone here. Now, did I take this whole pair and just chuck it in the bin because it didn't work out? Oh god damn, I'm never gonna make money trading. Well, no, because the question now is, you've made your first prediction didn't work, Prince. Now, what do I do next? Now I have another zone up here. You can see these zones stick out to you. Why? Because they are essentially like support zones. Now how you determine support zones is like, go onto your daily chart again, or your higher time frame chart, and see what sticks out. The stuff that sticks out is most likely going to be the areas where market puts in these reversals and consolidations or whatever. Now I've determined these two areas to be my support and resistance zone, my structure zones. Market has blown through the first one and said, I'm not going to give you anything here, Prince. That's fine. All I have to do is wait for the market to come up to this next level to hopefully give me what I'm looking for. If it doesn't, that's also fine. But if it does, you can be sure I'm going to take advantage of it. And then guess what happened in this case? Just zoom in there, see what happened. Okay, so this is methodical. This is a 1 2 3 4 step process. What is the market doing? What is it going to do next? How are we going to take advantage of it? So market comes into this zone. You can see, again, what I want to point out is you see a lot of people putting in these kind of yellow lines that I did here. And they say market touches this line. I'm not like a big believer in like support resistance zones being a line. I mean, it's a zone for a reason. It can't be one line. Now you have to figure out what that zone is. See the way the market reacted in this zone. So the market came down, put in this pin bar, retraced, bounced off it, came down, retraced, again, came down, boom, 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 broke down, came back, tested, 1 2 3. There's no one line where all this happened. You can't say this is where it happened or this is where it happened. Technically, this is the whole zone. Because market was just putting in all kinds of retracements and bounces and all kinds of drama in that zone. So anything that happens in that zone, I am interested. This is where I'm looking to do my damage, okay? Now, I'm in that zone. Clearly, you can see my wick is right there. Boom. Now, I'm going to use something very simple that I'm pretty sure you've been doing technical analysis for any number of times you've heard of before. And that is a double top, okay? Mind blown, right? No. Very simple concept. But it all depends on how you apply it. Now, market came into that zone. I wasn't waiting for market to put in a double top in this area here. I wasn't waiting for it here, even though you can see we had it here. I wasn't waiting for it here. I was waiting for it right in here. Now, if market had put in this double top 1 pip or 2 pips below this green zone, that's where the discipline comes in. And it does happen where the market gives me my entry reason before we get into that zone. But the discipline comes in where you say no, even though you get your entry reason. Because it's not an entry reason. It hasn't happened where you want it to happen. You can't just go around trading random double tops and double bottoms in the market. I mean, there's another one here, but I didn't trade it because that would have been a loser for me anyways. It did reverse, but it wouldn't have given me my target. Now, I'm waiting for the market to come to me. Don't chase the market. Let the market come to you. This is the double top, that very, very classic double top. Very nice. One of the best, actually. You rarely get this kind of double top, but we got it here. And now the question is, okay, well, this is the entry. This is the entry. This is the entry spot. Okay, now where's my well, first of all, let's talk about stop loss. Now, if you looked at my post I actually put like a post a couple hours ago about stop loss. A lot of people, because a lot of people think that support and resistance zones are lines. What they do is they neglect their stop loss, and they kind of, if they enter, like say at this yellow line, they put their stop loss right here. Well, you need to understand something. The market moves because people move it. If the market is coming all the way up here, there's someone pushing it up. There's people buying into this currency pair. You can't just expect everyone to stop here because you decided to sell. I mean, market reverses because people sell, but you need to understand, for people to sell, there has to be other people buying. And chances are, market is not just going to stop on a dime and reverse. So you can't just put your stop loss here. You have to move your stop loss away from this mess. I use this analogy. If a car runs into a wall, it's very unlikely it's just going to stop immediately. It's probably going to break through that. It's going to stop likely, but it's going to break through that wall, probably come out to the other side, probably explode, flip over, crash into the house next to it, but it's going to stop nevertheless. Now the question is it going to take you out before it stops? Well, that depends on where your stop loss is. Like if you see here, let me just move this out of the way so you can see what happened. Now pay attention, look at this. This is where the stop loss, this is the initial test for the double top. Now you're looking for the market to put in a retest of this yellow line. Technically, this is where the retest happened. This massive green candle here. So technically speaking, I mean, I didn't enter here because I wasn't here when it happened. I think I got the notification and I entered somewhere above here. But it's fine because you can see all these candles. This is the hourly chart, so you have all this time. This is why I love swing trading. Even if you don't get your entry, you still have a lot of time to get in usually. But anyway, I digress. You can see this is the entry point here. But the market didn't stop there. The market actually put in 1, 2, 3 more candles pushing up before the sellers finally, the buyers finally gave up and saw that, well, we can't really do this, and then dumped all their positions before the market retraced. So you can't expect the market to just stop because you decided to buy at that particular second or hour or whatever. You have to give the market room to breathe. You have to give the buyers time to sell off their positions. Okay, this is why you don't want to put your stop loss right neck to where your entry is, or even worse, don't use a stop loss. People say they use psychological stops. That's fine as well, but people just tend to think whatever they decide to do in the market is gonna be what happens. So that's the second question. First question is, where do I enter? Second question is, well, where's my stop loss? Because that's very important, if not more important than your target. Final question is, well, where am I taking targets? Well, like usually, targets is going to be at the retest of the previous structure low. Remember we talked about previous structure low and outside return, and then new structure low. You can see this area here is my previous structure low. Now I'm going to put my target right there. If you notice, my target is a little bit above. Technically, my new structure low is dropping so many yellow lines. My new structure low and my previous structure low is right here. Now my target is not there. Well, why? Because just like the stop loss, I know, just like the sellers pushed the buyers out of the market here, I know, and I put my stop loss above, I know there's going to be buyers waiting to push the sellers out of the market here. Does that make any sense? So the reverse is essentially the case here. You don't want to put your target all the way down here, because chances are you're going to get stopped before that happens. Alright, so what I did is I put my target at the first instance of any kind of trouble. What does that mean? Instead of taking this target down here, this structure level down here, I took this one. Now, fair enough, the market moved a few more pips down. You can see we put in, yeah, technically we could have made more. We would have made 7 whole more pips. But if I had put it down here, guess what? I would have made nothing. But now I became greedy. So I put my target here, put my stop loss somewhere reasonable. Look at that risk to reward. Okay. See, almost 3 to 1. I will take that any day. So put my target here, put your stop here, and then look at the way market just came down there, and then look at what happened. Just like we had a double top reversal here. Look at this double bottom reversal. Look at the way the market came down and put in the opposite, which is essentially a reversal strategy for a buy. So we sold into a double top, and a lot of people bought into a double bottom. Now this one trade made me 160 pips. Now this is just one trade. This is a 2 to 1 or 2.5 to 1 risk to reward. Okay, now this is how you win every trade. I took the same trade that I just showed you. So again, the market reversed and we broke and closed above the previous structure high, essentially putting us into a reversal, essentially putting us into a bullish position. Okay, and now the reverse is the case. So now we have a new structure high outside return, now we have a new structure high outside return, now we have a new structure high outside return. Essentially, I'm doing the opposite of what I've done here over here, because the market is telling me that we are bullish and the market is telling me that it's about to reverse. Now this trade hasn't lost yet, but I'm gonna pretend it's a losing trade, okay? Currently in this trade, but it hasn't lost yet. Now we've had a double bottom here. And you can see, just like always, the market doesn't reverse on the double bottom. This is technically our entry price. Alright. Target is way up here. Now don't forget, don't take the highest peak if it's too close to the next lowest peak. So I take my target just before we hit this big peak right here. But don't worry about the targets. Let's look at how much damage we could take. So the entry should be at this price, 0.66940. You can see the market has quickly blown through that with this massive red candle here. Let me just move this to the side so you can see. This massive red candle has just blown through our entry price. Looks like we're recovering again, but again, I don't know what's going to happen here. It could be a winning trade, it could be a losing trade. It's irrelevant, but what I wanted to take away from this is, look at my risk to reward again and look at how much I'm risking. I'm risking 22 pips to make 90. This is more than a 4 to 1 risk to reward. Even if, let's just say, even if the market comes down and takes me out, I lose 22 pips. Now, how much did I make in the previous trade? Let's just go back and have a look. I made 160 pips. So it's two trades, one winner, one loser, maybe. Hasn't even lost yet. But I just wanted to use this as an example to show you the power of risk to reward. This is how you can win every time in Forex. If you can put yourself in this situation and just be mindful of how much you're risking and how much you're winning when you win. Now, I would take these trades any day. I don't care about like an 80-90% risk to reward. That's irrelevant. There's little intricacies that I can actually flip your trading on its head if you don't pay attention. Now look at this. I'm risking 22 pips. Now, if I've made 160 pips a couple of weeks ago on this currency pair, you think I'm worried about losing 22 pips now? Oh no, because I'm in the green. I could essentially lose this trade. I can afford to lose 22 pips 8 times over and still make money, or at least break even. Now obviously you don't want to lose 8 times in a row. Sometimes it happens depending on your trading strategy. But if you're winning more when you win than you're losing when you lose, you should be alright. Now that's the lesson I want you guys to take away from this, and I will see you guys in the next one.
Alright guys, well, thanks for watching through to the end, and I do hope you understand now what I'm trying to say by how to win at Forex every time, or how to win in trading every time. Doesn't necessarily mean that you win every single trade, but just make sure that when you do win, your wins completely eliminate your losses and that puts you in miles ahead. Now this is a concept that is fairly common in trading, but people tend to gravitate towards the 100% win rate. You can have a 50% win rate and still be profitable, just like I've showed you. But hopefully guys, I'm gonna be doing a lot more content. Put a comment in the comment section below. Anything you are struggling with trading, or any questions you might have trading related, just like put it in there, and I will definitely be sure to get to it and make a video on that as well. So Guys, drop a like and just put a comment and follow as well. Make sure you subscribe if you haven't, and I will see you guys in the next one.